An upgrade to that development pipeline. Obviously taking on board the comments that Peter's already made, though.
A fantastic result, and I guess there had been expectations for a strong development pipeline, although we have seen that boosted by about $1 billion there. But if we have a look at Westfield's business, there's three parts to the business. There's a reoccurring income that we see coming through from the shopping centres, then we see the property management income, and then we also see the project development income. I think the impressive thing is, although we saw growth in that comparative net operating interest in the property portfolio, we also saw strong growth in property management, which was up by 12%. And in terms of the project development, that was up by a massive 31%. So you can see the variability in Westfield's earnings really comes from this project pipeline. And this project pipeline is still quite strong. They're looking at a redevelopment of their Bradfield project over in the UK. There's a few redevelopments here in Australia as well. The Macquarie Centre one, which it's doing on behalf of AMP Capital, where it's designing and constructing, and also the redevelopment in West Lakes in Adelaide. That's a $95 million project as well. So altogether, I think this Westfield result today on expectations, but the good thing in terms of the share price reaction today, I think, will be to that upgraded outlook that we've seen for the full year. So we should see the shares doing extremely well today.
Probably on a day where we could expect James Hardie to do quite well, given what we saw in the US, guys. Julia Lee, consumer confidence picking up, but also that the signs on the housing market this morning helping Wall Street higher. Walk us through this one.
So I guess James Hardie, we've seen the shares down by around about 2% on the back of these results coming out. And that's disappointing because, as you mentioned, Brooke, we saw home builders doing extremely well in the US. In the US, we did see new home sales jumping in the month of January, and we saw the building sector up by 4.2% during the session. So it does look like this James Hardie result are disappointing. And we've seen this where we have seen stocks running up very hard, expectations running hard, and to meet those quite perfect expectations is quite hard. If we have a look at James Hardie, it's been moving ahead of the US housing recovery, and it's done extremely well in the last 52 weeks. So unfortunately, on the back of these results, we are seeing some selling in the stock today, down by 2%.
Peter, catches your eye in the session so far today?
I think AGL Energy is going to do well on the market. It should see a rise on the back of those results, reaffirming that full-year forecast. One thing to keep an eye out for AGL Energy is its coal seam gas projects. We know that there's legislation now probably coming into force that prohibits coal seam gas projects within a 2-kilometre radius of residential property, and that will impact on things like its Camden project, which is a $100 million project, as well as the Hunter Valley, so flagging potential write-downs to come. But AGL Energy also being boosted by hedging. It's seen about an $85 million gain due to hedging going in its favour. So it looks like AGL Energy shares may see a pretty good day, but altogether we're expecting to see a good day on the Australian market. European markets were down overnight, mainly due to the uncertainty in Italy, but the US markets really shrugged that off. So we are expecting to see a bit of a bounce back in the banks today, as well as the material stocks, which have been beaten down over the last week. So altogether expecting to see a positive session on the Aussie market.